Right, let's now give you a sense of the latest in the world of business. Risk aversion continues to plague global market activity, resulting in thin conditions. Asian markets remain mixed, despite Japan's 6% GDP growth, while the U.S. awaits the latest from the Federal Reserve on interest rates. Here at home, the JSE also traded weaker, in line with global developments, and the rand hit a 2-month low. Just One Lap founder Simon Brown joins us now to help us make sense of what's happening out there. Good morning. Thank you so much for your time. Tell us, in terms of expectations in today's trade, following a positive start to this new week, what can be expected?
Morning, Paul. We started green this morning, but what are we? Just over 30 minutes into the trading day, we've already drifted lower. We've got the top 40 off 0.5%, industrials down 1/10, resources almost 1% lower, and the financials 0.75% down. This is, as you mentioned, we had a good bounce in the US yesterday, but equity markets are worried, but I think also not just worried, that they've had a massively strong move already this year. S&P's up 16% in the US, the Nasdaq almost 40%. So any sense of jitters and people basically locking in their profits, heading for the exits and taking the money off the table. And I think we're going to see that probably continuing for a couple of weeks, perhaps even into September.
How's the rand doing with emerging market currencies faring?
The rand is doing poorly, as you said in your intro. I mean, it's 19.18 against the US dollar, 24.35 on sterling, 20.95 on euro. If you look more broadly, we've seen a fair bit of dollar strength over the last couple of weeks. Oddly enough, even subsequent to their downgrade by Fitch, almost 2 weeks ago, from AAA to AA plus. But we're seeing broadly emerging market currencies under pressure. The Polish zloty, the Indian rupee, Filipino peso, even the Korean won. Pretty much across the board, we're seeing emerging market currency weakness. But we're also seeing some developed market. We're seeing sterling. We're seeing the yen, notwithstanding those really good data numbers this morning out of Japan. And, of course, the euro, all struggling as money flows into the US. Interestingly, not buying equities, as I just mentioned, those are being sold off. They're buying government bonds, which are paying some of the best yields that we've seen in literally decades, if you just go and buy a 5 or 10-year US Treasury bill.
What's the local market expecting from the second quarter labour force survey?
So we're looking for unemployment at 32.9%, which is exactly what it was last time. There will be some movements in that. There's some seasonal work that comes through in this period, and some that moves out, particularly in the agricultural space. But what we're not going to see, and what the market, everyone in South Africa would love to see, but is not expected, is some strong unemployment numbers coming through, picking up, gaining employment, people finding jobs. That's just not happening. In a low growth environment, hindered by load shedding, we're just not gaining jobs at all as an economy. 32.9% unemployment, call it 33%, puts us squarely as the worst in the world by a very long way.
Let's take a look at company news. Talk us through Transcend Residential Property Fund results. What are they looking like?
Yeah, so this is an interesting business. I quite like residential property as an asset class on the JSE. A lot of folks are worried about tenant defaults and the like, but you get to critical mass. They've got about 4,000 units, with property prices moving higher and interest rates at record highs, primes at highest level since 2009. Certainly demand for residential property. And we see that come through. And there's a couple listed on the JSE. And certainly we've seen that demand coming through. They do have challenges. Eskom's not so much their problem. It's the tenant's problem. But there are issues around just general costs, municipal costs and the like, which put a bit of a drag on returns. But an interesting niche within the property space on the JSE.
Finally, Home Choice International has released interim results. How's that shaping up?
They're a great little company. I mean, the numbers were, call them flat. They've gone very big into the digital space. You'll see them often. You visit a website there. There are adverts. They do home linen and furnishing and the like. And then you can do it on financial terms. You can pay it off over 3 or 6 months. And they're actually making good money on the lending arrangement. The actual sales side is struggling. A consumer under pressure, inflation, unemployment, as we mentioned, interest rates, as I mentioned. It is tough out there. But I got to say, flat in this type of environment, I thought a commendable set of results. The problem with the company is just very low liquidity, which is sort of jargon in my industry to say it's difficult to buy and sell the shares because there's very little interest in the business, notwithstanding it's a good operation.
Yeah, very well. Thank you so much for your time and breaking those numbers down for us. Just one lap, founder Simon Brown talking to us about the latest in the world of business.